Welcome everyone to a new video. In this video, I want to go over why trading market internals is very important. Mastering the market internally will give you such a clear outlook into some sort of external low or objective. I use market internals every single day, from fair values, order blocks, etc. Especially pools of liquidity in between externals. It's super important. And I would like to just show you guys why I use them and why it's important. So let's get straight into the video. Market internals will give you the precision you need in your models, and will give you obviously your intraday outlook. So what I mean by that is the areas of where you form your models at, the highest probability retracements into the lows or the highs. For example, in this case scenario, we're going to mark this high, we're going to mark this low in between. Now these two here, guys, are external liquidities. So the reason why I choose to swing high and swing low is because this is my current intraday range. So by intraday, I just mean on the 15-minute chart, you can zoom out and you can see that this is your clearest swing low and your clearest swing high. Now, once you've marked your externals, you're going to obviously look for some sort of internal objectives. So objectives internally will obviously be the liquidity you're looking to target first. And the reason why I say that, guys, is do you guys notice how in between these two pools of draw, the high doesn't get taken? So we fail to seek it once, fail to seek it twice, and then sooner or later, we come down to this low in between. So in between that, even if you did long, you actually had a fantastic rev model, continuation model, whatever model you're looking to trade in between it, targeting internals first. So that's why I tend to do internals, obviously mostly, and then the externals are just runner price targets. So let me show you guys a quick example of that. As we see, we have two external objectives here for our example. Now let's go to the 1 minute. So this is where I find my internal objectives, which is super important. Now internal external liquidity is definitely based on your time frame. It's relative to your time frame. But for example, let's just say we're looking for some sort of continuation model lower. You can see the relativity in weakness here. Failure to seek high, full shifts lower. We do have draw sitting at 604 and 735 in between that. Price is failing to obviously expand higher above these clear necklines sitting at the highs. So in between these guys, I'm going to look for some sort of model. Now, when I'm looking for some sort of model in between, I'm looking for price to always fail some sort of internal high, to seek the internal high or the internal low. Doesn't really matter depending if you're longing or shorting. So in this case, it would be a high. So let's continue here. So there's a good expansion. Now we can mark this internal high here. Now we can mark this internal high here off of this displacement. So far, no model in between. I'm still looking to fail to seek this high in between. There we go. So now we took this high. Now you can drag this here. Now, my friends, this is called a failure to seek high. Now, what this high does is this high solidifies my bias to the downside, where price comes close enough, takes an internal, fails to seek a higher time frame objective or lower time frame objective, and instantly reverses lower. If my draw here is clearly bearish, I'm obviously going to look for a model to the downside, even with all these little retracements in between that. What I like to do here is I'll mark an X for my internal, my failure to seek high. Now, essentially what a failure to seek high does, it's not SMT because we're not correlating between two, like for example, ES and NQ. This is just for NQ only. So this would be a failure to seek high only on NQ. So what this does essentially is stabilizes your bias, number one. Number two, we can use this as a confirmation to fail to seek that high. Number three, this occurs when price fails to take out a previous high or low, obviously, indicating a potential shift in price, structure, or liquidity. So liquidity would be, in this case, continuation lower into our draw. So our first internal draw would be here. And then obviously you mark everything in between that. So here. So for my initial first price targets off this inversion in between, I'll look for some sort of scales at around 785, 769, and 770. Now the difference in application between a failure to seek high or low is it's an individual market behavior. It happens within a single chart when price refuses to take liquidity below or above a key low, or for continuation off an external. So what that means is, see how price fails to seek this internal high? We fail to seek it, and then we instantly reverse lower. Little shift in structure, and here's your model for continuation lower, and we should take that low sooner or later. There you guys go. So the SMT divergence is a comparison between two correlated assets or instruments, highlighting strengths / weaknesses / imbalances. So essentially, this is a failure to seek only on an individual market behavior. So what I'm looking for here, obviously, is the failure to seek. And I can give you guys another example of that. We take all these internals, we're failed to seek the high, great. We take this internal, we fail to seek the previous high, great. We can do that again. We take the internal, we fail to seek the high. Look for your short model. Here's your inversion, here's your shift in structure. There you go. Here's your entry off a closure. And your PT in this case would be here. So, like I said, this happens every single morning, every single day. You just need to figure out your timing. So timing, essentially, you usually time with a model. What confirms a failure to seek high or low is a strong expansion or a shift in structure. And then after you shift in structure, you're going to look for some sort of imbalance, some sort of internal. And this internal provides you with, of course, your point of interest for you to short, strain to the low. And there is your full draw on liquidity. So this is what I look for every single morning. Some of you are probably asking, Krabby, why is trading internally super important? The reason why it's important is because we do have internal liquidities, and obviously you're going to find a lot better point of interest on the lower time frame. So what I mean by that is when you're looking for point of interest, you're going to look for the highest probability retracement or displacement for your model, and then you're going to look for obviously your entry or point of interest into your drawn liquidity, which would be in this case 735. So, and what I mean by that, guys, is if we're looking for price to obviously continue lower here, let's remove all of this. Let's take this all out. We're going to look for price to displace above this previous high here. Why is that? Because this is your previous pullback swing high, and then you have your internals in between. So if we go on replay mode here, we take this out. Now we watch. Good expansion here off this internal. So as you guys can see, we have protected lows, this internal, fair to seek low. Now, this expansion here provided us the confirmation to seek some sort of internal higher. Now, most people would look to obviously short this area here, not me. The reason being is once we fail to seek these lows here, I know that price wants to retrace a little higher to some sort of internal or objective to then seek lower later. Now, when you guys are trading very strong trend, obviously you need to make sure you're in a decent area for you to be shorting. Now, price is more likely to displace higher, even if you're in a short bias, higher if we are already expanded super far. So maybe 100 points, 200 points, etc. If price is already displaced, you need to make sure you are on the patient side. Now, what do I mean by this? Here, I'm not a fan of a long yet. So, what do we notice about price currently? We're still on the weaker side. We're not expanding too hard. Just slow grind higher, slow grind higher. Now, this internal here, keep this on watch. So we just took this internal high, internal for value gap. Now let's continue here. So off of this displacement in between, most people would solidify a long bias here. And the reason why I wouldn't is because I know in the higher time frame, we failed to displace above 165. We failed to seek a higher time frame high as well. We fully reversed on the lower time frame. This is a full rev model. Now we should be continuing into the low sooner or later. Now it's just a matter of time. So, Krabby, how do you not get faked out? How do you not enter early? The reason why I don't enter early is I always use these internals first. So guys, if we did take a short around this area, this is PT number 1, which already got taken. So now I can't take the trade. Now I have to wait. I need to focus on this drawn liquidity and this one in between. So once you confirm this fair to seek low, you continue into some sort of bias, whatever your bias is for that current day. Great, that's fine. But for my short bias currently, I'm looking for this low. So we expand. Now we take your next internal. Now what we need to do here is show instant displacement, and we need to fail to seek this high here. Krabby, what confirms a failure to seek high? A failure to seek high is confirmed off expansion and a shift in price. So here's your shift. Now we just need this inversion, and we need some sort of retracement into this BPR. So BPR is a balanced price range. Now let's continue. There you go. Here's my entry. Now we should seek this low sooner or later. Now the reason why this is a valid entry is because we haven't took, look at this guys, we haven't took an internal low yet. So if you are a little bit on the scared side or whatever, I don't know how you guys trade, but partials at 785.50 is completely fine. You can take partials off an expansion. You can drag stop if you'd like. So there you go. And there you go. Off of this expansion here, you can take a trim. There's your second PT. And this would be my main objective for the low. And just like that, this is how I identify A+ models trading internally. You cannot be as precise externally. What externally does for you is it provides you this right here. This is what external do. So there you go. External provides you with liquidity, and there you go. You went from an A+ model to a 211 point trade. So trading internally is probably the best thing you can do or learn. And the reason why I trade internally, guys, is because it's about understanding order flow and displacement. True displacement, aggressive expansion candles should be backed by strong market internals. Spotting, let's just say, smart money accumulation, distribution, when price even consolidates near like PD arrays, for value gaps, etc. Once we shift internally and we have a higher time frame draw sitting lower, that model will play out. And the only way if it doesn't is 1, if your bias is incorrect, 2, your timing. So that's also why I use internal, obviously. Especially if you're trading ICT models, internals confirm your bias, they confirm your continuation, and they confirm your whole model in general. So it's a win-win in all scenarios. You have precise entries, you have precise models, and that's why I personally like to take my entries internally and target the externals later. Now I'd like to show you guys, obviously, a trade example, one that I took myself. So as you guys can see, we have a 2-hour higher time frame objective that we just took out currently, and I have a new week opening gap at around 50.50. So off of the morning, I'm looking for, all right, are we gonna continue higher off of this external here, or are we gonna displace and reverse sooner or later? So essentially here, guys, what I personally wait for is price to form some sort of structure low and expand higher. Now when we expand higher, just like that, I'm gonna mark this fair to seek high. So notice all video, what I've been talking about. We take an internal, look at the internal, and we fail to seek the high, which confirms this. Now I need a shift in structure right here. There you go. Another failure to seek high. Mark that in between. Great. So this solidifies my bias on the lower time frame. Now we obviously are going to look for some sort of model in between there. So in most cases, people are going to look for model around this area. This confirms your shift, the displacement. Personally, I didn't see anything off open. Wasn't super clear to me. That's fine. That's great. Price takes an internal, expands, shifts in price, fails to seek your previous swing high, takes an internal, and continues lower. Now I can look for my model. So in between that, I needed to make sure that price was significantly weak and I had liquidity to target in between. So this 50.50, fantastic low. Why? Because this is my previous new week opening gap. So this is the gap in market that I'm looking to obviously trade into. Now, when I'm looking for a continuation model lower into draw, I'm always going to look for some sort of internal first. Internal, take a high, and then shift in price later on. So I'm looking to take, obviously, this internal we have marked. Great. I'm looking for price. Maybe consolidate a little more and shift aggressively and then show me displacement into the low here. So we can wait it out. There you go. So we have our shift in price. Now I need some sort of aggression. So I'm going to mark this internal in between. Price continues, and there we go. So once we mark this internal, price obviously fails to hold this for value. I'm going to look for some sort of inversion in between to confirm my entry for my short. And let me bring up how it looked beforehand. So this is what I was looking for beforehand. This is in the trade. This is PT number 2. This is 0.96. This is final PT at 0.50. So 50.50. Now let's go back. Let's continue. There's the PT. All off-market internals, by the way. Next price target will obviously be the full low at around 230 points. Stop loss here. And there's your low. Now the reason why I put my stop here instead of here is because we failed to displace below this low. So when we fail to displace below the low, I'll keep the stop at the previous high, which is fine. Just gives me a little more room to hold the trade, especially if I have obviously all this room, 200 points, to hold the last runner. Now the last runner is super small. If you get tagged out, that's fine. That's completely fine. But in most cases, I'll displace below the low first, and then I'll move the stop. So as you guys can see, displace below, previous pullback high, displace, move the stop, displace. You can move the stop here, honestly, if you wanted to for a tighter stop, but I just kept it in between. So even if you guys did here, move the stop, that's completely fine. I don't know why today I just kept mine at this high. And honestly, thank God I did, because we fully took out 50.50. So this was a 230 point trade around a 17 point stop until full price target for the runner, not for the full position, was around a 12.8 R. I executed this one live. Super good day. This is a simple continuation model, trading market internals, trading strength, aggression. You could do discount premiums. You could do anything you like. Just understanding order flow, displacement, and market internals will give you an outlook like this. Obviously, everything said in this video is not financial advice. This is just how I like to do things, and hopefully this helped you guys out a little bit. Thanks for watching.